traders, welcome to the TMT stock market strategy video for Thursday, March 16th. Well, the Fed has spoken. They raised 25 basis points, which we already talked about yesterday's morning video, that pretty much baked into the cards. When you see the market starting to move pre-announcement, you know that they were pretty much gambling on that the market is going to like the 25 basis points and that the Fed was going to increase rates only 25 basis points. Now, if they went 50, it would shock the markets. If they didn't raise at all, that would also shock the markets. We talked about that in yesterday's video. Feel free to go peruse that video in our YouTube channel or on our website at tradingmarkettechnicals.com. So where do we go from here? Well, we said that we are going to be either on a fourth wave minor pullback, or we're going to just continue with our fifth wave and final wave of this bull market run from 2009, which would create some sort of a blow off top. We'll get to that in the indices in that video. But what I want you guys to be aware of is what's going on around you, right? So we look at all of the indicators, which I haven't shown you really. It's a short video, but again, I do have a major announcement coming out on our videos the next couple of weeks, if not next week sometime. Just kind of prep up our website and the videos itself in its entirety. So we need to know what's going on around us. So a lot of the indicators are overboard, staying overboard, grossly overboard. That does not mean it's a sell signal. Yes, the markets are above 25 PE. Right? We're at 26.3, I think maybe 26.4. We're very expensive. There is no reason to buy stocks here. If you're looking to build an equity portfolio, or if you're looking to enter the market, since you have not done so, there's no reason to buy stocks here. Now, markets can go a little higher, could go to 24.50. That's really our target if we continue somewhere around that area, give or take a few handles. But we do think that we're on our final descent, ready for this blow off top. Now, and I want you guys to be aware of that. You can see here in front of us is the VXX. These are VIX instruments, VIX instruments. This is the VXX, and here's the XIV. Now you could see the difference in the spread here, right? You could see in the beginning, just showing you, let's go back towards April, how wide we were. And what happened? Well, we have this tremendous descent from $20 just back in April, from back up here at $75, coming down to this area here. So what does that tell you? Well, for instance, the VXX is the most heavily shorted since the instrument has ever been created, and continues to be so every single week. Now, we do know that the VIX is a skewed product, right? The managers have to sell and buy the front month contract, which that creates contango most of the time. And if you don't know what that is, feel free to send me an email. I'll explain it to you, or you could just Google what is contango. And then there's backwardation. All right. Well, this is the XIV. Now, if you think XIV is going to 150, think again. What's going to happen, and we don't know when, but it does happen, you're going to get a massive short covering rally, because at one point in time, you just cannot go straight up. The markets cannot go straight up. And I understand 2009, 10, 11, 12, and 13, we had a Fed-induced rally. And we do still have a Fed-induced rally, but very limited. Once the Donald Trump euphoria is over with, and once Donald Trump starts making some mistakes and creates havoc in the market, you're going to see the VIX explode. Now, we don't know the time. If anybody tells you when, you can get a guess or an idea, but please, guys, nobody knows when the market's going to turn. Okay, so therefore, what do? We continue to play the trend. That's the safest bet. Okay, we'll talk about that in the indices. But what's going to happen is, since you have this converging together, right, we have virtually no spread here, we're going to have this happen. And it's just a matter of time before this does happen. VIX, can the VXX go to 15, 14, 13? Sure it can. But probably we'll get a reverse split at one point. Can the XIV go to 100? Absolutely. And you would still make money at these highs. But the risk is tremendous getting in long XIV or shorting the VXX. At any given moment, we have a lot of risk events still going out there now abroad. We have the Dutch elections, you have the French elections. There's a lot of things going on abroad that will affect our market, since we are a worldwide market here. So I just want you guys to be aware of that, okay? Let's get right to it now. So the Fed raises 25 basis points. You would think that the dollar would benefit, because a lot of the foreigners need to buy dollars to buy treasuries, right? Well, that didn't happen. The market rolled over, right? So again, when you think something's going to happen, It does think again. The markets will fool you and do something opposite, and this is what happened. And this was a very big distribution candle here. You could see that we did not get above our RSI, which was our trendline support area. Big distribution candle. So right now, anything that was bullish is negated. And if you are a dollar trader, which I am not, I just follow the dollar for the commodities and stocks, I would be looking to short any rallies underneath this area of support. Okay, here's the dollar. Now, let's talk about GDX and GLD, which, as you know, I am a big fan of trading. We have our higher low, and I'm giving you the free Pro Trader Premier levels again. We have our higher low of 21.35. This is going to be very easy to manage now. Now, are we still in an uptrend? We are, because we are making a higher low from this previous low, this base. Okay, we did explode higher. We're still underneath our proprietary price channels here, our TMT price channels. So I'd like to see a little more evidence. What I really like to see in a perfect world is take back, if the market were to sell off, take back half of this candle. And when this candle stays within, like, let's say $22, $22.20, the next day, which would be tomorrow, take back the high, and then we would start to move higher again. And again, you could see that previous neckline of that failed inverted head and shoulders, 24.37, would be really the first area. And then, of course, we still need to take out this swing high of 25.75. Okay, but I do like this. You can manage this accordingly. Your stops would be kind of wide at $21, just below $21 here. But anywhere in this area, if you can pick an area based on your trading plan, that would suffice. Okay, gold, same thing. We had a nice big push in gold. 113.26 is going to be the line in the sand. If we lose that, we should double test this and double bottom this area here. Okay, same thing though. I'd like to take back half of this candle, and then tomorrow really start to move higher. But I am liking gold on the pullback. I really like it a lot. TLT bonds took also a nice big push higher. Okay, again, we're staying within this range. We had talked about this. Here's the TMT price, our Pro Trader Premier video. 116.30, 116.83, 121.94. We're still within a trading range, but again, if you really like the way bonds are acting, remember, bonds are heavily shorted. Heavily shorted. That does not mean I don't think that rates are going higher. I do, and I do think we are in an interest rate rising environment. However, I think we get a big squeeze and shake out all of the shorts, and then where it stops and fails, that's when you look to enter a bond short again. Okay, at this time, I would be a better buyer in bonds. Next would be the spiders. Let's talk about the indexes. You could see here we had a very mild pullback. We talked about this, that there's nothing really wrong with the market except that it's a very, very extended. So what do? You dial it down to a time frame where you can trade or look for entries to get long. I would not be shorting the market at the moment. There are no shorts out there, but there are. If there are any shorts, they're going to get squeezed. This will probably take out the 240 and move higher. Once we take out this swing high, the high of 240.35, we'll put some upside targets here where I think this market's going to stop. Okay, and again, these are just targets. Okay, Fibonacci targets could go higher, obviously, but let's see where we go from here. And again, guys, I mean, I do think that this is totally insane, but it's not what I think, it's what the markets are doing, and if you want to make money, you got to follow what the trend is. Here's the 60-minute. Here's our scenario chart, if you will. And remember, we were looking for maybe a small fourth wave minor pullback within the larger fifth wave move. Right now, that's why I mentioned this is not even a pullback. That's why I had said that yesterday in the video. I said I do believe this is not a pullback at all. This is a slight mild consolidation. Yes, price did pull back, but very low volume. There was no emphasis to the move lower, so that's why I said this is just a mild bullish consolidation. And if that's the case, then if that does happen, I would be looking for a move out of this range, take out the swing high, and start doing sort of like a sidestep, and then one big move, one big blow off top. And when does that come into play? Could come into sometime maybe early summer or late summer into the fall. which would be notorious of August, September, October. Now we are in the middle of March. We're almost done with March already. So you got April, May, June, July. So you have 4 months of consolidating and grinding higher, and then we have the big dump sometime in August, September. I do believe at one point in time in 2017, and I'll pinpoint it a little bit more, that we're going to have a market sell-off and a nasty sell-off. It's inevitable. Markets can't go higher like this, continue to go higher for another 3 to 5 years when you have prices that are through the roof, PEs are through the roof, and you have no discount of buying stocks. So just, again, use a little word of caution. But once it does happen, it's going to happen. It's going to happen really, really fast. But until then, again, stick with the trend. Here's the IWM. Again, here's your free Pro Trader Premier video levels. And right now, again, not yesterday, but the day before, IWM went negative on the year. So it is lagging all of the other indexes, and it is our secondary leader prior to the transports, which it is deemed our leader. And you can see here, it did have a nice day, took back that candle. Let's see where this goes. If the transport starts to break out too and takes out this high, then I think we have something that we're in the process of the blow off top. Okay, and we'll see what that brings next. Again, Qs, you can see here. Remember our Bollinger Bands are squeezing, so energy's building. So now that we broke out and took out the high, what do you want to do with the Qs? Well, we want to look to buy pullbacks. Nice volume day yesterday, so I'll be concentrating on the Qs today and the spiders. Have a great day, everybody. We'll see you tomorrow.